Good evening. Today is Friday, March 26th. I would make my overview very brief today as we have a very special guest on, very good friend of Victor joining us in a little bit. It should make for a very interesting conversation. S&P 500 was trading today in a 25-point range for most of the day until it finally broke the 3930 level in the last minute and had a huge spike up to close the day on the high and to make it a positive week for S&P 500.
Almost an all-time high also. By 1 or 2 points was missed an all-time high.
Right, we're almost at all-time high, missed by a few points, which probably very likely to make on the open on Monday. Russell was up almost 2% and NASDAQ was up 1.5%. Surprisingly, Tesla was down 3.4% and took Kathy's ARK ETF with it. So it looks like momentum stocks are still underperforming a little bit. Oil was up 4%, continuing its up and down volatility as of late. And GME stock was trading in a very large range today from 163 to 219, yet it managed to close pretty much unchanged for a down 1.5%. And bonds were down. I'm sure Victor has something to say about that. And Bitcoin is trading at 54,000 after coming very close to the Soji level and rebounding yet again. There is not much news today that I've noticed that caused the last minute spike, but there are some news about Biden press conferences coming in, and it looks like he has known which specific reporters to ask questions of, as he had a plan of their seating and had their numbers circled. So he was prepared for specific questions from specific reporters, and he even had specific answers written down that he was reading from. So it looks like the whole press conference was mostly staged. I guess that is woke, as Victor would say. And another interesting news is that our transportation secretary, Pete, I'll just call him Pete, I can't pronounce his last name, says that he wants to tax drivers per mile. And that's how he wants to pay for his infrastructure tax, which would be very interesting because it's driving per mile basically hits mostly hardworking middle-class Americans like plumbers and electricians and other people who go to work, as opposed to upper middle class who stays at home, doesn't have to pay for that. I don't know if it's going to be a good idea. And our CDC director warning of possible COVID surge again. They just can't have one day of good news, saying that cases will increase or have already increased by 7% since last week. Meanwhile, our Florida governor is actually lobbying hard the CDC to allow the cruise ship to return. Cruise ships is a very large component of Florida business, so maybe that's one of the reasons that CDC is banning cruise ships from operation, to just hit back at Florida, because we already have a very low unemployment rate despite all of the stuff being open, and very low hospitalization rate and low mortality rate while everything is open. So CDC wants to maybe punish Florida, I don't know, for that by banning cruise ships. We'll see if DeSantis has any sway. That's it for me for today. Victor, do you want to introduce our guest?
Yes, our guest is a very eminent and wonderful gentleman, Mr. Larry Williams. He's an anthropologist, a writer, trader, educator, author, politician, and a generally good guy. And
Welcome, Larry. Can you
very,
hear us?
I'm honored to be with him. He's been very kind to me. He introduced me to a whole new world, as he's introduced many others. He started thousands of traders. He's very open. He's famous for his books, his seminars, and also, not as important, he in real life brought $10,000 into $1 million in a real trading competition. And he even taught his daughter to trade. His daughter is almost as famous
More
as he is,
famous.
Michelle Williams. And did you teach your wife to trade, Larry?
Oh, yeah, oh, yeah. Can you hear me?
Yes.
Yes.
Yeah, Louise, well, she was buying stocks before we met, but she's learned a little bit from me. Hopefully some of it was good. I'm actually teaching my youngest daughter to trade. She's been doing pretty well, actually, following some mechanical trading systems. So,
Okay, Larry, teach us something and tell us a story.
well, I got a lot of stories, but probably the best one's about you, Vic.
We definitely want to hear that.
Well, we go back a long, long ways. It's interesting. We come from different intellectual academic backgrounds. As you know, Vic is a mathematician. I started as an art major. I wasn't very good, so I switched to journalism. Still wasn't real good at that, but I got out of school. So it's an interesting blend of minds. One's looking very visual, I think, and one is mathematical.
Yeah, talk about yourself, Larry. They're much more interested in you, and you're much more eminent than I am.
Well, I don't know about that, Vic. Well, you know, my family never invested in stock. We didn't even know what stocks were. My dad's a working class guy, a similar background to Vic's. And in college one day in 1962, the stock market crashed when John Kennedy rolled back steel prices. And I asked somebody, what does this mean? The Dow was off, I don't know, 50 points, 100 points, which was massive back then. There's nothing now, but for then it was huge. And the guy said, well, if you would have went short yesterday, you could have made $1,000. I went, $1,000 in a day? I mean, where do I sign up for this? This sure beats working in a refinery like my dad did, like I did. You know, this was like, I got to find out about this. And it just captured my mind, my spirit, really my soul ever since. It's like trying to, you know, my dad always said, son, learn to work with your brain, your mind, not your hands. So I work with my hands, but he's skilled with what he did with his hands. So that's better than just a guy digging ditches, but learn to work with your mind. And that was kind of a combination of things. What my dad always told me, like, this is a mental game. The stock market, mental, I didn't realize then it's also an emotional game. And that was the beginning of it. John Kennedy and the stock market crash in 1962.
Keep going.
Well, from there was a lot of reading. And, you know, because I'd gone to college, I thought that if it's printed, you could believe it. I found out that's not necessarily true. There was fake news and fake books back then, just as there are now. I bought a couple of books in the stock market. They said, keep this indicator and this indicator, and you can trade. I got up every single morning, real early, got the LA Times, kept all the indicators. Money was going out, it wasn't coming in. I go, wow, I don't know what's going on here. I got to do something different. So I started thinking about things. Just a lot of just thinking. I don't know if Vic knows this, but I have a degree in acupuncture that I got many years ago from the North American Academy of Acupuncture. And the thing that impressed me the most, other than learning the skill of it, was that the way the Chinese developed it wasn't just poking needles in people by sitting and thinking about how does the energy flow in the body, where are the chings, the lows and mediums. And they would just sit and think about it. And that really impressed me. Like, well, maybe I should just sit and think about the market, not try to run numbers and look at charts and all that stuff. Just think about conceptually, how or why should this work? And that has always been a significant point in my life of just think about things. I don't always do it. I rush into things, trades, especially too quickly, too soon. But in the background, I'm always saying, you need to think about this. So I thought about it, and back then stocks traded differently. They actually closed the stock exchange on Wednesdays in 1967 because the volume was too high. The volume was 10 million shares. 10 million shares a day. There was too much volume to process. It was all by paper. We didn't have computers. And stocks, I think, traded differently and much more difficult back then because the commission just to get in and out was maybe half a point, maybe 3/4 of a point. It was a percentage of the asset. It wasn't just a flat $5, $10, whatever to get in and out. So the vigor was substantial back then. And people tried the day trade and had about the same results they have now, even with lower commissions. So I think the market's become progressively easier. And certainly it's attracted more people. I mean, my gosh, look at the volume now. And when I started, there was a handful of newsletters, maybe 10. And now there's everybody with the computers writing a newsletter. So old guys like Vic and I have been around a long time. We're kind of, we're in the background. There's this whole new crop of generation of people. We kept paper charts by hand. We started to get computers in about 1967 with punch cards, and we'd punch cards and run them through the computer. We really didn't have any idea what we were doing. We're just optimizing numbers, looking for moving averages or whatever, but you can still learn from that. And I learned a couple things. I learned that you had to be very careful that you get hurt in this business. I got hurt. I also had a really two inspirational people in my life. Gil Holler, who was a momentum player in the market. He'd been a tugboat captain in Florida and went to State Line, Nevada for tax purposes and traded and wrote a newsletter called The Holler Theory, wrote a book about it. The book is still applicable, even though it was written in 1963 or 4, I believe. And Gil was very helpful, opening a door to me and being kind to me and explaining the relative strength concept in the market. He was one of the first people to do relative strength. And that really made me realize that maybe I could do this. I did have some trading success and was trading back then. Unlike today, you'd sit in a brokerage firm, and you watch the tape go along the tape, and the old guys would fall asleep. One guy in the brokerage firm, Dean Witter, where I would watch the market, actually was a boardroom marker in 1929, the crash in 1929. And I don't know how many times Murray told the story, but he marked down Bank of America from $400 a share to $3 a share in one day. That was a crash, obviously, 29. It was crazy. So a lot of old stories in there. There's one old guy, Jack, and Jack always said, never try to grab falling daggers. He said, everybody's trying to grab falling daggers. You gotta wait till the dagger falls and sticks in the floor, and then don't pick it up. Wait till it stops quivering, then you can pick it up. That's what people are doing wrong with stock. They're trying to catch falling daggers. And that's really a truism. It's still true today. I see people, we were in the spec list today, there's some commentary about the law of gravity. The law of gravity, when these prices go way up, you think they come down. Well, they don't, they keep going higher. When they come way down, you think they bounce. Falling dagger concept, when they usually don't, they keep going down. It's just what I've learned. You have to think the opposite of how most people think. What's really bad in the market is very good to me. When stocks are crashing, I want to be a buyer. That's one of the lessons I got from Vic. I tend to be bearish most of the time because it's really quick money when you're right. But we don't have that many declines. It took me meeting Vic really to realize that there is perpetual upward drift. And you're an idiot if you try to bucket. Oh, you can bucket from time to time. If I get a really strong sell signal, yeah, I'll be short for a while, but not for long, because upward drift prevailed. God bless Vic for teaching me that. I mean, it's a huge lesson. And when I do YouTube videos now, I do those for stockcharts.com or some other stuff I do. I always get people vitriolic about the crash is coming, and it's the deficits in the government, and it's Biden, and it's Trump, and it's whatever. And you know what? I hear those same cockamamie arguments in 1962, the budget, the deficits, the Democrats, Republicans, whatever. If I would have just bought some stocks and held on to them and never traded, I'd probably be a lot wealthier. That this market thing is the greatest money-making machine in the history of the world. If you buy, upgrade as new stock come into the Dow Jones or the S&P 500, and you're a long-term player. Buffett's a good point. He says he doesn't buy stocks to sell them. I was in Montana last week. I have a friend there whose family's done incredibly well in real estate. And they've been in Billings, Montana, a couple hundred years now, 150 years, I think. I said, how do you know when to sell your real estate? And Charlie Egan said, we don't, hardly ever. I thought, wow, that's kind of like the stock market. There's upward drift to life. You know, our life kind of goes down, but it's upward drift to price. So you clearly, there's a time to sell short, but it's limited in time. It doesn't last very often. And you don't want to try to perpetually work that side of the market, which is a huge long-term lesson. As a short-term trader, yeah, in and out of a couple of days. That's totally different though than this. The art of trading is really tough. The easy money is the perpetual money-making machines, buy stocks, upgrade, hold on.
Well,
Gary, tell us a little bit about yourself.
Well, gosh, you know, like I said, my dad worked in a refinery. My dad really wanted to go to, I'll tell you, this is a personal story, but it's an interesting one. My dad had a severe stuttering problem. And he saved up a lot of money during the Depression to go to stuttering school. And he went downstairs to his house, to his parents, and said, I'm going to stuttering school. And his father said, well, where did you get the money for it? He said, I've been saving it up. And his father owned a grocery store called Cash and Carry, was about to go bankrupt. And he took my father's money, put it in the business. And so my dad continued working, saved up the money. And the next time he left a note, said, I'm gone, I'm going to stuttering school. And did, and came back, and he occasionally would stutter, but he really learned. So it was a great story of perseverance from my father. And that he had a dirty, stinky, smelly job working in a refinery. I worked in a refinery. I've been there. I know what that's like. But he always said, Larry, that smells the smell of money, it's the smell of dinner on our plate at night. And he worked his way up from a common laborer to head of the instrument department, all the fancy instruments that regulate heat and temperatures. He was in charge of all that. So to me, it was a great lesson that this man who wished he would have gone to college, wasn't able to due to the Depression, was able to advance and really do well for himself. And he's a huge inspiration in my life. I certainly haven't honored him as much as I should have, and especially when I was younger. I had no idea how great my father was. So it was one of my life lessons. Then I went to college. Like Vic, I had a little athletic background. I played football in high school, track, wrestling, all that stuff, and went to play football on a scholarship, and was mediocre. I played center at 168 pounds, and I was okay, but not great. And transferred, and I went to BYU my first year of school. I'm not a Mormon, but I had the opportunity to play football there. And then went to Oregon, where I saw really big guys playing football. I said, I better study instead. But I've always been involved in athletics. I've run 80 marathons, something like that, played handball, pretty competitive level. I think that there's a lot of strength from athletics that are applicable to the markets. You have to persevere, you have to practice, you have to learn, and you have to learn from other people. And sometimes it hurts a lot to trade. I've lost money, and it can be very painful. Just like, pulling a hamstring in a sprinting race or whatever, but you still, you learn to never quit. Our mutual friend that we had, our Falstaffian friend, always said, never give up. And that's certainly a lesson from my father, a lesson from the markets, a lesson from athletics. That the ultimate enemy of all athletes is old man age. And that's the one you got to be careful of. And the real mark of a champion isn't how many games you won, it's how many times you were able to come back. The real champion can come back from when he's down. When you're down trading, you're down in a game. Those are the real champions to me. The guys that were in the midst of defeat and turned it around and came back. Those are really heroes in my book.
indeed.
What kind of travel and hobbies do you have?
My hobby is the market. But after when I was young, I wanted to be a professional magician. And there was a magician who came to my own town, Billings, Montana, Carlini the Great. Carlini came, I watched every show that he did, every single show. And after the last show, I snuck into his dressing room and I said, I want to travel with you. I want to be whatever you want me to do, I'll do for you. And he looked at me, he said, kid, he said, see the girl out there in the show? I said, uh-huh. He said, she's sleeping with a truck driver. I didn't have a clue what that meant. And he said, in the last town I got stiffed. I didn't know what that meant either. But he said, you don't want to be a magician. You got to go to college. This is a dying art. Get out of here. And he shoved me out of the dressing room, the Shrine Auditorium in Billings, Montana. But I've always dabbled in magic. I appreciate magicians because it's very mental and that's very physical. There's a lot of dexterity, but the markets are very much like what a magician will do. You go, watch this, 1 time, 2 times, 3 times, it disappears. Well, the market will go 1 time, 2 times, you buy and whoa, it doesn't work. So there's a lot of the emotion, the way the mind works. I can make something look like appear or reappear or vanish based on how your mind works. Not necessarily because I have very fast hands, got nothing to do with it. It's usually sleight of mouth is better than sleight of hands. And the market is that way. It will set things up that make you believe, aha, this comes next, because we think in a logical instead of an illogical fashion about the markets. So that's always been something I've appreciated. Some of these magicians, I mean, they're such diverse people. Harry Lorraine, who Vic may have knew, was in New York, was a bright guy, wrote books on memory, wrote books on markets. It's like, you know, these guys are very, very bright people. So that's been a hobby. Of course, staying in shape's a hobby, trying to be healthy. But really, to the downside, I really haven't had a very broad life. It's been the markets. And I probably have neglected a lot of things.
You didn't
because of the
neglect
markets.
politics, did you?
No, it neglected me. I did run for the U.S. Senate in Montana 2 times. I ran against Max Baucus, incumbent senator, and lost, and then John Melcher, incumbent senator, and lost. They were really close races. Max went on to become our ambassador to China, which was interesting because I spent a lot of time in China at the same time that Max was the ambassador. I was lecturing to thousands, tens of thousands of people in China. I thought, how interesting that is. 2 little kids from Montana end up in China. Max is ambassador and me is the most widely published author in China. I was like, that's kind of an interesting parallel. But politics was an experience. I thought that I could make a difference as a US Senator, tend to be conservative in most areas. And it was a great experience. Got to be with President Reagan, Air Force One, all kind of stuff, meet a lot of senators. They're no longer with us. Barry Goldwater, John Tower, a lot of really interesting people, Bob Joel, John Danforth, Phil Crane. So I got to see a glimpse of politics that most people probably don't get to see. Pardon?
Do you think politics have changed since when you were running, or are they still the same fundamentally?
Well, I think it might be more volatile now, but it's still the same. I think there's my experience, this could be really limited, and it isn't all, but all the politicians I met, I'm not talking about all of them, most of them have this huge need to be loved. They need adulation. They need people around them. They need to hear applause. They need to have people walk up when they walk in a room. These people are just sick for love, starving for love. That's a better word. And they can get that in politics. So most of these people, I think, are driven by a need for adulation. Not all of them. Certainly President Reagan wasn't that way. Barry Goldwater wasn't that way. But if you look at a lot of these people, Governor Cuomo, and they've got to have affairs, they've got to have adulation around them. So I think that strain is still in the emotions of most of these political people. But politics, it's still, to me, a good political figure is there to help his state, to help his people. And that's what your number one job is, to represent your state. And then because you're in the US Senate, it's going to be to represent America's best interests as well. But to me, the best way to look at a political figure is, do they represent their constituents or don't they? The people that vote for them, do they represent Wyoming or New York? Vast political differences in ideology in those 2 areas, but who are you representing, and are you representing the right thing? Money probably is maybe larger now than it was when I ran because of political action committees. But I think it's still the same game. People want power.
Um, when did you become an anthropologist?
Well, not so you mean more of the archaeological stuff, maybe, Vic?
Yes.
Yeah. Well, in 1984, 85, I met with Jim Armstrong. Jim Armstrong was the first astronaut to drive a car on the moon. And on his trip back from the moon, Jim said, you know, he had a really huge religious experience, became a born-again Christian when he was in the Sputnik coming back. And he wanted to look for some biblical archaeological sites. He was very interested in the search for Noah's Ark, and he got involved in that. That was kind of interesting to me. Like, nobody's found this thing. I don't know if it exists or not. I didn't have his depth of religious belief or fervor, but since nobody had found it, well, let's go look for it. So we did, and that led to looking for where Mount Sinai is. And in 1982, 83, I did a lot of work in Saudi Arabia and Egypt, and we found something in Saudi Arabia, and most people now think that's probably the most logical site where Mount Sinai was. We found a massive stone monument at the base of this mountain with a calf, an Egyptian calf, and the archaeologists for Saudi Arabia said, well, we've never seen this. This is an Egyptian glyph here in Saudi Arabia. We don't understand this. And so it's now begun. To get into Saudi Arabia back then, you just couldn't get in. You had to have special permission and visa, and we couldn't get in. So we got some documents that allowed us in, let me put it that way. And then we got caught with those documents, which was an equal problem. But when we were there, we were able to go to this mountain and take pictures, photograph, bring back rock samples. And that's now become, I think, pretty much biblical archaeology. And most people saying that's probably most likely the real Mount Sinai, not the one in Egypt. But the one in Egypt should have the cave on it, and it doesn't. The one we found in Saudi Arabia does have a cave on it. And there's a large campground at the base of it, which would sustain 600,000 people, however many were in the Exodus, and water. So that's an interesting aspect of my life. I still don't know there's the actual site. I just think we have better evidence, better data on it than any other sites. There's plenty of stuff on YouTube. If anybody's interested, go to YouTube, Google Larry Williams Mount Sinai or Bob Cornuke Mount Sinai, and you'll see that everybody's, just like Vic and I in the market now, everybody's taking our stuff and they're doing video tubes and books and everything about the stuff that we discovered, 40 years ago.
Larry, you've traveled to a lot of different countries teaching people how to trade. How does that work?
Well, it can be difficult because of the language problem, but it can be difficult in America too. I have two really interesting stories to me. I was doing a seminar, a very expensive seminar. I think it was $5,000 for 3 or 4 days trading, where I traded $1 million real time in front of people and gave them 20% of the profits after the seminar. And I was doing this in Rancho Seitan, California. And we'd made, not a lot, but I think we made maybe in 3 or 4 days trading $45,000, $50,000. So writing checks to people for the profits that I'd made. And there was one guy in the back of the room, just sat there, big black shirt on most all day, looked like he was sleeping. People come up to him and say, that's the most expensive sleeping I've ever seen. Day after day, this guy was just sleeping. And after we had a really successful trading, he came up and he said, hey, Larry, there's an Indian casino around here someplace. Isn't there? I want to go out and make some money. And I thought, wow, we just made money trading, and this guy wants to go to a casino and gamble. It's just like, it's unbelievable. The opposite side of that story is being in China and speaking to, there must have been 1,000, maybe 2,000 people in the lecture hall. And I walked around when I lecture. And I thought, I'm going to, in the back row, people always sleep in the back row, especially when I speak. I always know they're sleeping. I'm going to go see if they sleep in the back row in China. No way. Every single person in the back row have their cell phones out, they're writing notes. These are the most industrious, driven people to learn that in any country I've ever been in. Japanese are pretty good too, but by far the Chinese was incredible how thirsty they were for knowledge. In other countries, it's very different. Italy is, everybody's very laid back. Oh, let's go have lunch. In Brazil, I was supposed to lecture at 9 in the morning. I'm there, yeah, I'm prompt guy. I'm there at 9 o'clock. Nobody comes. I thought, wow, nobody showed up today. But no, don't worry. By 10:30, everybody rolled in. It's just such a totally different, we're in our time frame, how we reference things, and that's not everybody is in our reference frame. And the other underlying point here is when Vic started, the only people trading the market were US citizens that I knew of. That I don't think anybody's trading in Italy or any consequence. And now throughout the world, everybody seems to want to trade. It's just incredible. This thing has grown way beyond Topsy. This is like unbelievable. I never thought it would be like this.
How do your seminars, how often have you been in Japan? When I was there with you and we came out together,
I've probably
you
lectured.
had so many followers, so many people who idolize you there.
Well, that's kind. I think because my books were early on, my only strength probably really is I was one of the first guys in this business to write books. So people, I've just been around a long time.
You've written 11 books.
Yeah, not all on the markets.
Which is your favorite book?
Oh, my favorite book. Oh, probably How I Made $1 Million Trading Last Year. That stuff has held up so well from when it was written in 1970, 73, 70. So that would be it. And Japan, as you know, the people are so delightful. They're so courteous and so kind. They want to learn. I've probably been in Japan, Vic, maybe I've lectured there 15, 20 times. I have a lot of really dear friends there, as you know, Hiro. And these people have just been great to us. A lot of respect for them.
And in China?
In China, oh gosh, I probably lectured in China 15 times, maybe more. I first went there in 1980 something, and it was such a different country than it is now. You couldn't go any place, and now it's open. There was no fresh food. Now there's fresh food. There were no American products. Now there's American products. China's, and I think, and Vic might want to wade in on this, I think what really turned China around, they became capitalistic, but they became fiat currency. And where did all that money come from? It had to come from fiat currency. The Bank of China said, we're going to print money, let people go buy things, build and do stuff. And they did. Incredible what they built and done. So I think it shows that being on a gold standard, which I used to think was really a good deal, it sounds so right, but actually doesn't work very well, that a government-backed currency that can be expandable or contractible can actually be very, very positive economic. To see China go from nothing when I was there, I mean, the only fresh food you had was what was in China at where you were. You'd have turnips and potatoes, and the next town you'd go to, 600 miles away, you'd have watermelon. There was no distribution system. But almost instantly, China blossomed and did all this. Why? I think it's only because of banking finance. They put money into the system, and poof, away went China.
So now that we have printing millions, is that US is going to be doing so much better as well, do you think?
Well, I think deficit financing, it's so hard for me to say this because it doesn't intellectually sound right, but deficit financing is really bullish for the stock market. If you look at any data, whenever we've had large deficits, we've seen substantial bull markets time after time after time. The big thing that cause bull markets, tax cuts and deficits. And they're both very bullish. And again, the Cassandras, all my life, from 1962 forward, I said, all these deficits. And when I ran for office in Montana, I would have this big chart I'd pull out across the entire arena. It's like 200 feet long. This was a deficit, 10 years ago. And now it's over here. It's 150 feet longer. And I was all concerned about the deficit. I was dead wrong on that because we've had these deficits and, we're in the stock market's high. We have more people working now than we ever had before. We've had a better economy. Things get better. I mean, the underlying condition of the world is it's a positive place. It's a hell of a positive place. And the optimist will prevail. And
Larry, are you a happy person?
most of the time I'm happy. Yeah. I mean, why not be? You got a choice, Vic, right? You can be happy or unhappy. I'm going to be happy. I'm going to be a happy guy. I see people going, why do I want to be that way? I want to be happy.
And how is it like living in the Virgin Islands?
Wow, it's so different here. It's so different. The streets are a disaster. Potholes in the street. I went out today. I was just so frustrated. Most people here don't use their blinkers. It's like this bizarre place to live. But the other side of that is you can drink and drive. It's legal. And we drive on the other side of the road. The only place I think left in the world where you can drink and drive. I don't do that, but I'm looking out my window. There's the ocean. It's beautiful tonight. So there's great tax advantages to living here. If you live here and are part of the economic development program, your effective state and federal tax is 3.9%. So it's a huge incentive to put up with the problems. We have a high crime rate, and yet I feel perfectly safe because pardon?
Where is that again?
U.S. Virgin Islands. You want to come, right?
Sounds fun.
Yeah, drink and drive. We make rum here, so there's no tax on alcohol. So alcohol is pretty cheap here as well. We drive on the other side of the road. The tourists come down, they get a lot of trouble there. They don't know where they are, which side of the road to be on.
You're the director of security in your compound, are you not?
I was for our homeowners association. I was for about 6 years, and then we got some new guys coming in, so I'm glad they took over. But yeah, we never really had any problems. There's really no security issues unless you're young, Black, dealing drugs, or selling guns. Guns are illegal here. We don't vote here also for our president because we're not full citizens. We're a territory. So the politics are 100% Democrat. There's maybe 5 of us that are Republicans. It's a very different political system. I've helped get some of these people get elected, trying to get good guys in there. And there is a political system here, but it's what I like about the Virgin Islands is very inefficient. And that can be very, very good. It can also be very bad, but the inefficiency of the system at times is a wonderful thing.
Can you get Amazon delivered next day, or at least
no. Oh, I wish. No. Even Amazon Prime here, you don't get delivered next day. You can get stuff delivered, and you can order it and maybe have somebody ship it forward for you. But no, Amazon's, you got to pay up for it. For Walmart, you got to pay up for it. We were just in Montana the last couple of weeks, and we ordered so much stuff from Amazon. It was so wonderful every day. The Amazon guy would come on, oh, this is amazing. We should order something that's here. But no, life in the Virgin Islands, very simple. There's horses and chickens in the street. That's in St. Croix where we live. It's rural. It's kind of like my Montana. St. Thomas, you see St. Thomas today, is much like Las Vegas. It's glitzy, it's fancy. The cruise ships come in there, and there's all sorts of stores and everything over there. We're pretty rural in St. Croix.
What advice would you have for the average listener?
Well, I think you need to find out about yourself. Are you a long-term trader, long-term investor, short-term trader? You need to know what time frame fits you. And that time frame, I think, changes. Vic might weigh in on this. I think when I was younger, my time frame was shorter than my time frame is now. So, but you need to know your time frame to focus on. And part of that is what's your objective goal? Is your objective goal to make 10, 12% a year? Or are you trying to knock it out of the park to make a higher return? And that combination of what's your basic nature and what's your objective here. And your objective has to be realistic. Most people, short-term traders, have totally unrealistic expectations.
What would you call realistic expectations for a beginning trader with limited capital?
And not lose too much would be pretty realistic. Gosh, if you could do 20% a year, you're doing better than most all the mutual funds. So people said when I won the Robin World Cup Trading Championship, took $10,000 to 1.1 million, as Vic said. And then my daughter won it, took $10,000 to $110,000. And I have students, usually most year in and year out, my students win these championships and they have gains of 200 to 600% a year. And that's horrible. It's bad because the average trader sees these guys who've learned well, I can do that too. So their expectation is they can do 200% a year. Well, we do that because we take on, we assume much more risk than most people do. That's how we get, the more you risk, the more your return can be, but the more you can lose. So these trading contests are fascinating. They show what real-time people can do, but they're not realistic for the average person. The average person, I think if you can do 15, 20% a year, my gosh, sometimes you do a lot better than that. As a professional money manager, you want to do better than that. But the average person, stop looking at trading championships, my record, whatever. Don't look at that. Think about what's a really good rate of return. Anything over 18% was phenomenal.
Do you have any risk management advice? Do you have like a particular percentage money lost on a trade, or don't risk so much on each trade, or a month or something?
Yeah, I do. I used to be, I risked a lot more when I was younger than I do now. I risk way too much. I learned the hard way. But I risk about 5% of my account equity on any given trade. So I know if, let's say I'm trading a $100,000 account, I could lose $5,000 in the trade. I can live through that. That's fine. It won't bother me. But if you lose 30% of your account, then that's too much. So I tend to go with about a 5% risk factor per trade. And I could have on 4 trades at a time.
Larry, thanks a lot. Appreciate
Thanks,
it
Vic.
very much.
It's been a real pleasure. Good seeing you.
You're a font of wisdom and a great model to follow.
Can I
Very
ask
kind.
one more question before we go?
Please.
If you don't mind, sorry to keep you long. Because you mentioned the falling dagger. So what is the difference between a normal pullback and a falling dagger in the stock or stock market?
I'll answer that. A lot of falling daggers go to 90% down. When it goes to 10% of the old level, then you can tell that the dagger is ready to turn. Happened in Thailand, happened to a lot of individual stocks.
So is Tesla a fallen dagger or a pullback? Example, as one example.
I don't follow Tesla because I'm a commodity trader for the most part. Could be a fallen angel. That's a little different than a falling dagger. But I wonder if I can bring Tesla up on my chart right here. And see.
Larry, this is beautiful. Thank you very much.
All my pleasure. Thanks very much, guys. Great seeing you and being part of this. Thank you very much.
Very kind of you.
Thank you.
And our readers, our listeners should listen very carefully to your stories and wisdom. Thank you very much.
Thank you. My pleasure. Thanks very much.